Welcome to another important chapter in our payments course. Today we'll focus on cross-border payments and remittances, two cornerstones of the global economy. These transactions enable international trade, support families across borders, and connect economies. However, they are also some of the most complex and costly types of payments, presenting unique challenges and opportunities. By the end of this chapter, you'll have a solid understanding of what cross-border payments and remittances are, the process of executing these transactions, key players and technologies involved, challenges like costs, speed, and compliance, emerging solutions and trends transforming the landscape. Let's dive in! What are cross-border payments and remittances? 1. Cross-border payments. A cross-border payment occurs when money is transferred between entities in two different countries. This could involve businesses paying suppliers, consumers shopping internationally, or investors transferring funds globally. Cross-border payments are essential for international trade, payments between importers and exporters, global e-commerce, consumer purchases from foreign merchants, corporate transactions, cross-border payrolls, dividends, or investments. 2. Remittances. A remittance is a subset of cross-border payments, typically referring to money sent by individuals working abroad to family or friends in their home country. Remittances are vital for supporting families financially, contributing to the GDP of recipient countries, especially in developing economies, funding essential needs like education, healthcare, and housing. Fact: in 2022, global remittances totaled over $800 billion, with significant inflows to countries like India, China, Mexico, and the Philippines. How do cross-border payments work? Cross-border payments involve multiple intermediaries and steps. Let's break down the process. 1. Payment initiation. A payer, individual or business, initiates a payment through a bank, money transfer service, or digital platform. Payment details include the recipient's name, bank account, or wallet ID, along with currency and amount. 2. Routing through intermediaries. Cross-border payments rarely move directly from payer to payee. Intermediary banks or financial institutions, known as correspondent banks, facilitate the transfer. 3. Currency conversion. If the payers' and payees' currencies differ, foreign exchange (FX) conversion occurs. Conversion rates and fees are determined by banks or currency providers. 4. Clearing and settlement. Clearing ensures the payment message is accurate and compliant. Settlement moves funds between the payers' and payees' banks, typically through a system like SWIFT or regional networks. 5. Payment delivery. The recipient's account or wallet is credited with the funds, often after fees are deducted. Key players in cross-border payments. 1. Banks. Banks are traditional players in cross-border payments, using the SWIFT network to facilitate transactions. Strengths: security and trust. Weaknesses: high fees and slow processing times. 2. Money transfer operators, MTOs. Companies like Western Union, MoneyGram, and RIA specialize in remittances. They operate global networks to offer fast cash transfers, but often charge high fees. 3. Payment processors and gateways. Companies like PayPal, Stripe, and Adyen enable businesses to accept cross-border payments. 4. Fintechs and startups. Players like Wise, formerly TransferWise, Revolut, and Remitly, leverage technology to reduce costs and increase transparency. 5. Blockchain networks. Platforms like RippleNet and Stellar use blockchain to offer near-instant, low-cost cross-border payments. Challenges in cross-border payments and remittances. Despite their importance, cross-border payments face significant hurdles. Let's explore these challenges in detail. 1. High costs. Traditional methods involve multiple intermediaries, each taking a fee. Currency conversion adds another layer of costs. Remittance fees average 6% globally, far above the UN's target of 3%. 2. Slow processing times. Payments can take several days due to complex routing, especially with legacy banking systems. 3. Lack of transparency. Senders often don't know the total fees or the exact time it will take for the recipient to receive the funds. 4. Currency conversion complexity. Fluctuating exchange rates can lead to unpredictable costs. Dual conversion, for example USD to EUR to local currency, can further increase fees. 5. Compliance and regulations. Cross-border payments must adhere to anti-money laundering (AML) and Know Your Customer (KYC) regulations. Variations in laws across countries add complexity. 6. Limited access. Many recipients in developing countries lack access to formal banking systems, relying instead on cash-based remittance services. Emerging solutions for cross-border payments and remittances. Innovation is transforming cross-border payments and remittances. Here are some of the most impactful solutions. 1. Digital wallets and mobile money. Platforms like PayPal, Alipay, and M-Pesa enable cross-border transfers directly to mobile wallets. Advantages: reduce fees, instant transfers, and access for the unbanked. 2. Blockchain and cryptocurrency. Blockchain technology is revolutionizing payments by offering decentralized networks. Transactions occur without intermediaries, reducing costs. Speed: settlements in minutes rather than days. Transparency: immutable transaction records on the blockchain. Examples: Ripple, XRP, focuses on real-time, low-cost cross-border payments for banks and businesses. Stellar, XLM, targets financial inclusion with low-cost transfers for individuals. 3. Peer-to-peer, P2P platforms. Platforms like Wise and Revolut use P2P matching to bypass traditional intermediaries. Instead of moving money across borders, these platforms match senders and recipients in local markets, significantly reducing costs. 4. Central bank digital currencies, CBDCs. Countries are exploring CBDCs as a way to improve cross-border payment efficiency. For example, China's digital yuan aims to simplify international trade payments. 5. Open banking and API integration. Open banking enables seamless integration between financial institutions and payment platforms, improving speed and transparency. 6. Regional payment systems. Initiatives like the Pan-African Payment and Settlement System, PAPS, aim to streamline payments within regions. Such systems reduce reliance on foreign currencies like the USD or EUR. Impact of cross-border payments on economies. 1. Driving global trade. Cross-border payments enable businesses to trade internationally, driving economic growth. 2. Supporting families and communities. Remittances play a crucial role in poverty reduction and funding education, healthcare, and housing. 3. Financial inclusion. Digital and mobile payment innovations are bringing unbanked populations into the financial system. 4. Strengthening financial infrastructure. The demand for efficient cross-border payments drives innovation and infrastructure development. Future trends in cross-border payments and remittances. 1. Instant cross-border payments. Advances in technology will make near-instant payments the standard, reducing delays significantly. 2. AI and machine learning. AI will optimize payment routing, reduce fraud, and improve currency conversion rates. 3. Tokenization of assets. Digital tokens representing real-world assets could enable seamless cross-border trade and payments. 4. Sustainability. Eco-friendly payment methods will gain prominence as businesses and consumers prioritize sustainability. 5. Collaboration between fintechs and banks. Partnerships between traditional banks and fintech companies will combine trust and innovation. Conclusion and preview. Cross-border payments and remittances are critical for connecting economies and supporting livelihoods across the globe. While they face challenges like high costs, slow processing, and regulatory complexity, emerging solutions such as blockchain, digital wallets, and fintech innovations are transforming the landscape. In the next chapter, we'll explore fraud detection tools and techniques in the payments industry, diving into how stakeholders protect transactions and data in an increasingly digital world. Thanks for joining me, and I'll see you in the next chapter.